investors at Nigeria's fixed income and FX market are taking a cautious approach to the market as they await the direction of the monetary policy ahead of the January bond auction. Dipo Ajayi, head of fixed income and FX at Chapel Hill Denham, joins me for this discussion. Dipo, thank you for joining us. Let's get right into it. According to what we're hearing, investors are taking a cautious approach, and we also have that bond auction. Help us understand how you see things playing out.
Yeah, since the beginning of the year, investors has been very careful in the fixed income, considering where the yield closed at the end of last year and the anticipation and expectation and the inflation expectation. So investors are expecting inflation to continue to go nuts. So as a result, a lot of people are very careful in cherry picking yield in the market, as so speak. So the expectation is that the monetary policy guys, they might actually not be as dovish as they used to be, considering what happened in the last inflation figure that was released by MBS. We saw inflation went as high as 15.76 from 14.89. So it calls for a concern that, and the key purpose of the central bank is to actually stabilize currency and ensure price stability. So if they are falling short of that responsibility, I'm sure the whole markets will actually call them out, and I'm sure there might be something around that in the MPC.
Well, tell us what your near-term outlook for yields is.
Yeah, we expect yield to actually inch up a bit. And one of the reasons why we're expecting that bogus move upside just because of the level of liquidity that is maturing into the system. From the Umo maturity, we're expecting close to about 2 trillion maturing in this Q1, and we're expecting coupon payments of about 500 billion. So in total, we are expecting close to about 2.5 trillion as liquidity in the system, and that's one of the reasons why yield might not actually move upside as much as we would have expected. However, we expect yield to actually move upside in Q2, considering the paucity of liquidity that we might likely experience in Q2.
Okay, let's quickly talk about the currency. We're seeing Forex reserves rising on the back of higher oil prices. We don't know how long this is going to be sustained, but oil prices appear to be at very good levels right now in the 50s region. So obviously that's more firepower for the CBN. But what is your outlook for the currency, especially since there's still that perception that the Naira is overvalued? If one just takes a look at the gap that currently exists between the parallel market and the official market.
Yeah, I think as we speak now, we know that Naira is not fairly valued, and that's when you're looking at Naira from the CBN window. But when you're looking at Naira from the parallel market, you feel that Naira is actually undervalued. So the real value of Naira stands between the CBN rate and the parallel market rate. So, and one of the good things to CBN currently is the level of the oil prices. Now, I think is a plus to the CBN. It gives them room to actually meet obligation and also defend Naira appropriately. But if we look at the real value of Naira, I think the real value of Naira stands around 440 Naira.
Okay, let's talk about your forecast for trading this week, starting with the fixed income market. Of course, we've decided that investors are a little cautious, but how do you see that playing out this week, especially appetite for bonds?
So for this week, market opened quiet, and this is not connected to the fact that there's actually a bond auction this week. The DMO is actually floating about 150 billion bonds into the market, and all the bonds on the issuance calendar, they're actually reopening. There's no fresh issue. So the market is actually very cautious or waiting for Wednesday when the auction will actually be conducted. And I think post Wednesday will give the market a fair view, a short to medium term view of where yield will actually trade, considering the fact that the level of participation in the Wednesday auction will go a long way in determining how much yield will move in the market. So for this week, we expect market to be a bit quiet till Wednesday, but I think post Wednesday we'll likely see some activity in the market.